I want to go over the statistics behind trend following. So I'm going to go through the exact stocks we're looking at, the exact strategy we're using, how we know when to buy in, how we know when to sell, etc. And then we're going to get into the results. So again, if you want to learn more about this, or if you want to see it for yourself, again, you can click the first link below and I'll actually have this report here for you. But basically what happened here is they studied 24,000 stocks across the New York Stock Exchange, Amex, and NASDAQ through January 1983 to December 2004. So again, that's what they looked at. All stock prices were adjusted based on cash dividends, splits, spinoffs, etc. So again, a very realistic study is what they did. Now, again, they have a ton of data, right, from January 83 to January 04. So that's definitely a huge span. Now, let's talk about the entry and exit points. All right. So again, what they're doing here is they're following a trend model on a weekly chart, and so again, they can kind of see what's going on with the long-term trend. So again, if you're watching on YouTube, you can kind of see the examples of where they are entering, but I can explain it here for you. So basically, let me just read here what they said. For the purposes of this project, the entry method chosen was the all-time highs close. More specifically, if today's close is greater than or equal to the highest close during the stock's entire history, then buy tomorrow. So basically, a very simple entry criteria that we can all use, right? For example, when the stock hit a brand new all-time high, they bought the stock. And so that's a great way to buy in. Why? Because it's a very simple method, right? Anybody can do that. You just need to go onto either your broker or any website and just type in stocks that made new all-time high levels today, and then you can start looking through those stocks. So again, that's what they did. They bought at a new all-time high level based on when they started the study. All right, so going through that, these show examples of them doing it for various stocks. Now, what were the exits? All right, so for a stop, is like exits are essential to any trend following strategy. That is correct, right? You need to be able to learn how to get out so that you make money and then prevent yourself from losing a lot, right? So they said we decided to use average true range trailing stops because they are universally applicable and commonly used by trend following programs. All right, guys, so the average trend following range is just how much a stock tends to move, how much its daily movement is, and that is based on a series of mathematical equations that's based on today's high minus today's low, today's high minus yesterday's low, and yesterday's close minus today's low, and that's kind of how it calculates the true range indicator. So basically what they were using is they were using a 10 ATR stop. So again, what does that mean? It means that average true range, they went down 10 average true range points, and that was where their stop loss was. So again, the stop loss can only move higher. So let's say the stop loss was at $10 and the stock moved higher, then the stop loss moved up to 11. Okay, well now the stop loss is at 11. So if the stock continues to go down, the stop loss will stay at 11. That's how a trailing stop works. It's when you set a percentage or roughly a level of how much it should go up when the stock price goes up as well. And so that trailing stop is a great way to have a stop loss for those who are too busy to monitor their stocks throughout the day, and it's something that I highly recommend. And so yeah, you can use a trailing stop, and that kind of shows how they use a stop loss for this model. So they bought in and they used that stop loss to follow through with these stocks. So again, those are all the criteria of the study, right? They were using a ton of stocks throughout 84 to 04, and their entry criteria was to buy when it reached a new all-time high level, and their sell criteria was 10 ATR below the current stock price. Now, what were they expecting? Okay, so they determined that based on what was happening, that they should determine how well these exits and entries work in the past. It was necessary to test the combination against the historical database while honoring the previously mentioned data integrity issues. So anyways, let's look at the results. So the results here is that average trade was about 15.2%. That's really good. That's a 15.2% return for average trade. You were in that trade for an average of 305 days. So again, that definitely is really close to meeting the yearly time frame, but actually over the year time frame, but we'll actually discuss that in a second and what that means for taxes. Your average winning trade was Your average winning trade was a 51% gain. Your average trade with both winners and losers was a 15% reward, which is amazing. Your average days in a winning trade was about 441 days. Your average losing trade was a 20% loss, but your average days in a losing trade was 175 days. So again, you had a winning percentage of about 50%, so you were right about 50-50, but you were right about 2.5 times more than you were wrong. So what I mean by that is like you're making about 50, but you're losing 20. And so again, those statistics play out in your favor really, really well. And so again, that kind of shows more, and it talks about the returns of the study. But basically what's happening here is that overall trend following generates a positive return. And again, that's a 15% year-over-year return. Guys, that's literally 5% better than the overall market with less risk during crash periods. And it's a very, very simple method to follow. They literally said, here's our strategy. You can use it. It works. And so that's a study that they did, and that's really, really cool. So if you're looking for a trend following strategy, a trend following system that you want to do, then make your entries be new all-time high levels, make your exits be 10 ATRs, and just follow that system. So they even break it down further, and they go in to some of the worst trades during the 1987s. Again, the next worst trades were during 1999, 2000, 2001. That's going to be, again, your dot-com bubble, so that makes perfect sense. And then 2004 also had a relatively high negative outliers. Now, again, you did really, really well in 2003, and 1985, 1986, 1989. Again, 2003 had a 72% return. 1986 had a 59% return. 1985 had a 42% return. 1984 had about a 3% return. So again, overall, for like 50-50, you're doing really, really well. And so again, that's an amazing point to see, is that in the long run, you're working. Now again, let's talk more about this. So again, tax efficiency is what I really wanted to discuss here, right? So again, the average hold time for your average trade came in a little lower than 12 months. And so again, that kind of qualifies you for a long-term hold position. And so again, what does that mean? Well, when we have a long-term hold position, guess what? We pay less tax on that. So again, what's it saying here is that trend following is generating a 15% return. Most of the time, the stocks you're holding is going to be held for over 1 year. And when it's held for over 1 year, you actually have lower taxes. So what does that mean? It means you're getting the best of both worlds. You're being able to lower your risk, increase your returns, and you're still paying that lower tax gain. And so that's an amazing thing to see when we're trend following, is that basically we can get all those stuff in our favor. And again, if you want to read through the study and see more of what's going on here, the evidence strongly suggests that trend following works on stocks. So guys, if you want to learn more about this, click the link below. But guys, this is a really, really cool thing to see, is that trend following can consistently beat the market, generate higher returns, and have less risk. All right, guys, thank you so much for watching or listening to this episode. It basically shows the importance of trend following. And if you want to learn more about how to do this for yourself, if you want to follow a system that works, a trend following system that's been proven to work over the many, many years, then definitely click the first link below to learn more about trend following and the trend following software that I started called the Impeccable Stock Software. It shows you the trend for any stock you ever wanted to know. Also ranks stocks that are about to trend really, really well, and it shows you those stocks on a daily basis and gives you the exact game plan, so you know where to buy, where to set your stop, and why. All right, guys, thank you so much for watching. I will see you in the next video. Make sure to smash that subscribe button and hit that thumbs up button if you enjoyed.